Welcome back, trader, to another live stream. We are currently on gold and US oil charts. And remember, the first thing you want to be doing when you identify your key levels. So we are going to mark out our key level first. And what do we identify as our key level? To where price has been before, or some name it as resistance and support area. So this is a support area. Here is our resistance area, the highs. So let's mark our support area first. You need to account for as many wicks as possible. So this is how we are going to draw this. Okay, so this is where we expect price to come back to. We'll scale down to the 1 hour time frame. You can see the price did not break below. Whenever price gets to that level, it close and leave a wick. It did not break down. So this is the strong area. So let's also mark out our highs. Let's do that real quickly. So this is what we identified yesterday as our retest. Remember, price broke, came back for a retest, and we anticipated a continuation down. But that didn't happen. When price came back, there was a news release yesterday, and price almost broke, but did not close above, did not close below, and it retraced. Price retraced, it moved back up. So let's scale down to the 1 hour time frame to see. Okay, this seems like a break of that level, but it's because of the news. So we are discarding this. This is not part of our analysis. So this is what we are focusing on this week's this week rejection. So we still consider this level as a strong level. We are not using this because this is a news release. This was what caused this impulsive move. So we are not using that. So we are still using this as a retest area, as a key level. So let's scale down to the entry time frame. I use a 15 minutes time frame. So price is now pushing down. We can still sell this market and place our stop loss above. Let me show you on the 4 hour time frame. We can sell the market, place our stop loss above this level. It's still okay. Don't worry about this bearish week. It's because of the news. As long as your stop loss is above this key level, you're good for sales. But you don't want to be selling immediately. Price already is moving down. We still want price to come back to this level so that our stop loss placement will be a little bit smaller. Because any sell we take now, you see our stop loss increases dramatically. So all we are waiting for now is for price. Yeah, the pullback is happening. It's for price to pull back to the level again to 24.57 for us to sell the market, and so that we can have a smaller stop loss. If we enter here 24.57, place our stop loss above this level, I think it's just a 4 pip stop loss. and it's more safer. Remember, always take your trade at key levels. Any sell we take here, you can see our stop loss placement increases. So let's wait for the pullback to happen for us to take the sell. We are not selling now. We'll just be patient to wait for the pullback to happen. Once price get back to this level, we are selling. Don't sell now. Wait. Price will still pull back. So next is on US oil. Let's do that. We're on the 4-hour time frame. While we keep an eye on gold, we're on the 4-hour time frame. Same principle applies here. Price is making lower highs. Lower highs, lower lows. So price is currently pulling back to the previous lower high. Price is currently pulling back to the lower high, to the previous lower high. This is the last lower high that was formed, and price came and retest that area. Remember, price do this all the time. So it came back and retest. We are still in a downtrend unless price break above and close strongly. That's the only time the trend will be changing, or we'll consider that a trend change, and price will go from being bearish to bullish. But as long as the previous lower high has not been broken, price is still trading below it, that's still good for sales. So let's scale down to the 1-hour time frame and see. As you can see, when price gets to the level, it left a weak rejection, and price continued down. Let's scale down. So, but we're not really selling the market now, because the probability of us winning this trade drops dramatically. Before we can sell the market, we need price to either come back to this level, to this area again, and show us sign of failing to break the level before we can sell it. Because right now price has already moved, and any sell we take, there's a high probability price might pull back to this level before we can get a continuation down. So all we will do now is to mark out our lows, our support area. So we are marking out our support. So this is our support area. When we scale down, you can see when price came to the level, to this level, just look at how many weak rejection is here. That's a strong sign buyers are sitting around this level. So we want to be mindful of this level. So whenever, if we are in a sell, before price get back down to this level, you should know how to manage it, because price might break the level. Let me show you on the okay, if you are in a sell already, you should know how to manage your trade before price get to this level, because price might break the level down, but you might get a reaction. You can see multiple occasions when price get to the level, we had multiple reaction, weak rejections here. So if you're currently in the sell, know how to manage it. Either trail your stop loss, take some partials, or I don't know the risk management you use or how you manage your trade, but manage it before price get back down to this level. But I'm not in a trade yet. All I was waiting for price to pull back a little, because price is currently in the middle of nowhere, and this is a low probability trade. I don't take this type of trade. I like taking trade at key levels, either on the highs or lows. Highs or low. I only take trade at key levels. That's part of my trading plan. I don't take trades. I don't take low probability trade, because any sell I take here, my safest stop loss must be above this level, and you can see the range, because price is always allowed to come back to this level before it can continue its overall trend down. So as long as price has moved, I'm not in the trade yet. I just wait for it to come back to the level before I take a sell. I'm not doing anything now. I'm just waiting for that to happen. So let's go back on our gold chart. So back on gold, as we were saying, all we are waiting for is for the pullback to happen, for price to come back again to this level to reduce our stop loss range. Right now, if any sell we take now, our stop loss must be above this key level. Our stop loss must be, any sell we take here, our stop loss must be above this level, and our range will be, our stop loss range will be bigger. So all we are doing is we just want to reduce our stop loss range. So that was why we're still waiting for price to at least pull back to 24. Let's see, pull back to around 24.57, around these weak areas, to take a sell and safely place our stop loss above the level. I think from 24.57, that will be a 4 pip stop loss. Remember, on gold we are only looking for sales. The trend of the market is down. Price was pushing up. We had a break of that level. This is an uptrend. We had a break of the level. Price came back for a retest. This is our retest area we have marked. So we are currently waiting for the continuation back down, for price to finally break this level and continue a downward move. So price is pulling back. So we are waiting for price to get to 24.57 to sell the market. So let's be patient. Remember, trading is 90% waiting and planning, only 10% execution of that plan. So if you are really serious about quitting your 9 to 5 job and trading for the longer term, this is how you need to be trading. Don't just come to your chart and if you feel like buying, buy. If you just feel like selling, you sell. You're going to blow up your account, and you are not going to be here for the long term. You might win 1 or 2 trades because you are treating it as a gamble. You might win 1 or 2 trades, but sooner or later it's going to catch up with you. But what's going to sustain you for the longer term is to have a trading plan. Come to the chart, analyze the chart. Always use the 4-hour to analyze the chart. After you have analyzed the chart, you have marked out your key levels from the 4-hour time frame. Then identify the overall trend of the market. Is the market moving up or down? The market moving up or down? Or down? or is the market moving sideways? So after you have identified, you have marked out your key levels, and you identify if the market is moving up, if moving up, down, or sideways. So this is the second thing you need to identify. And after that, you start planning your trade, and that's what we did. When we came to the chart, if you were early, you identify that the first thing I did was to mark out our highs, our lows, our supports and resistance. We identified that, and we identified the overall trend of the market. Was it up, down, or moving sideways? And then we planned our trade, and we are sticking to the plan right now. So we are waiting for our plan to play out. If our plan play out, we are going to get a trade. But if it doesn't, we are going to walk away and look for another opportunity, or wait for another opportunity later. So on gold, all we are waiting for, as we said, our plan is for price to pull back to 24.57. Waiting for price to pull back to 24.57, this weak areas here, for us to sell the market, so that we can reduce our stop loss range. Because any sell we take now, as I always say, our stop loss must be above this key level. So you can see, if you take a trade as 24.57, our stop loss becomes smaller. We only use 4 pips stop loss. But if we take it here, our stop loss range increases, and we don't want to be doing that. We want to be entering trades with a high probability and low risks. We are not cheating the market, we are just being conservative. So, but if you are having a good if you are having a good amount of capital or equity, or if you are using a more smaller lot size, then I think you can enter the sell now, place the stop loss above. But I'm using a mini lot size, so I don't want to be risking that much. I want to be risking a reasonable amount of my account. So price is continuing down, and that's okay. If you not get the pullback, that's fine. But if you're currently in the sell, well, good luck. As long as your stop loss is above this key level, you are good for sales. And that's one of the lessons to learn today. Have a trading plan. Have a plan when you come to the chart. If your plan play out, take the trade. If it doesn't, walk away from the chart and look for another opportunity. That's one of the tips for today. So on US oil, price is pulling back. Still pulling back. We need price to pull back to some of this level to retest this area again, to create what we identify as a double top for a overall continuation down. But like I said, we can't take the buy, because right now price can go either way. Price is in the middle of nowhere. So if you take a buy back up to this level, there's a high probability price might turn back, continue down. Price can either go both ways around at this level right now. So we don't want to be taking this trade. I love taking trade at key levels, either down here or up here, and that's where your high probability and good trades comes from, either from these highs or this low, but never in the middle. Never in the middle. You can still take the trade here, but your probability of winning and your ranges decreases. Imagine if I take a sell from this range back down to this lows. You can imagine the range. So this is a high probability trade. Have a more bigger range and high possibility of winning because I'm trading with the trend. The trend is down. So that's how you need to be trading. Don't just take any trade. So in the live there's my contact is in the video description, or you can check out my page. If you have any question or there's something I said that is unclear, I'm open to feedback. You can chat me up on WhatsApp. I'll respond to you as soon as possible, because for me WhatsApp is it's my hotline. I can respond to you sooner on WhatsApp. But we have our trading community on Discord, on Telegram, so you can check out our page. There's an invite link there. You can join. It's for free. But if you're interested in the VIP signal group, it's on Discord. You can also join or chat me up. We'll discuss how I can add you to our VIP signal group. For now, if you have any question, chat me up on WhatsApp. I'll respond to you faster than you can imagine. We're open to feedback. If there's something you are unclear about, just write it down, and after the live stream, chat me up. I'll get back to you. Thank you for the likes. We have 3 likes. Really appreciate you guys. You are the reason why we keep doing these streams. So if you are just joining us new, welcome to ZyusFX. Here we share on tips, strategy on how to scale up your personal and pass your evaluation, prop firm challenges. We have this live stream every day from Mondays to Friday. We trade for an hour the pre-London Open and 1 hour the London Open, the New York session. So let's go back to the chart. Price is not doing much right now. We're still waiting for price to pull back to 24.57. So around this 54.57 for us to take a sell. We can still sell the market. I love taking trade at key levels. Key levels around this level. Don't want entering trades with a more bigger range, stop loss range. Price has pushed, so I'm not taking any sale. I'm just waiting for price to pull back to 24.57 for me to take a sell. Remember, I'm not stopping you from selling. You can sell. There's still range back down to these lows. As long as your stop loss is above this level, that's fine. You can still take a sell now. But I personally, I'm not selling the market now. I'm still waiting for that pullback. And if it doesn't happen, fine. I miss the trade. I'll still get another one. That's the beauty of Forex. There's always another trade in the corner. So I don't get impulsive. I have a plan, and if the plan doesn't play out, I look for another one. I let the trade run. So I think that's the analysis on gold and US oil. So I'm going to let's check on Pound JPY. If we can get a trade there, that would be great. Pound JPY. Pound JPY price has been flying up since yesterday because of the news. And yeah, let's mark out our level first. Just give me a second. Give me a second. Okay, welcome back. I'm back. So as you can see, gold is pushing down. So if you're in the trade already, can safely go break even now. Can set your stop loss be above this candle, this candle 24.56. If you're currently in the sell, you can do that. Safely remove the risk from the trade because price is going down. We're currently looking for sells. Overall momentum is down. Price came back for a retest of that key level which we have marked for a continuation down. So as I always tell you guys, price move in three phases. When the market is trending down, price will first move, and after that move we'll get what we call an exhaustion. Price will pull back a little slightly, so more like it's an exhaustion. So after a push phase, price will exhaust, more like a resting period before a continuation down. Continuation down. So this is a three phase of the market. So you need to be able to identify what phase the market is in. First phase is the push phase, then the exhaustion phase before overall continuation of that trend. So this was the push phase yesterday. This is a push phase. We have identified it. So this is the exhaustion phase, which is this price exhaust. Price rested at this area. Then this is the continuation. Some people can identify this as liquidity, collecting demands, and the rest. Everyone has its own perspective. Trading is trading. Just understand the basic principle. Doesn't matter what you call it. Once you identify the principle, you are good. You are good to go. So we are now entering the continuation phase, which is this bearish candle back down. So this is the continuation is happening now. We expect price to break this level and continue down. When price is moving down, it's making lower highs, and we are now anticipating a lower low, which is this continuation, for price to break below and create that lower low. So that's all we are doing. It's no rocket science. Once you understand the basics, fundamental of trading, if you understand how the market is moving, the sky is the limit. There's no way you won't make money in the market. So we're on Pound JPY. So let's mark out our level. Remember, our level is always going to be on the 4-hour time frame. So this is our lows. If price is going to continue up, then it shouldn't break below this level. So let's scale down to the 1 hour and see what's happening there. So as you can see, whenever price gets to the level, it leaves a weak rejection. See multiple weak rejections. So this is a strong level. This is a strong support level. Price is not supposed to break the level. So but if I'm not going to always be checking on Pound JPY, all I'll do is to set my sell stop order. I'll set my sell stop order below these weak areas, because the first thing I identify this as a strong level. Price is holding this level, and if price decide to break this level, then the trend is changing from being bullish to bearish. So if price is going to break this level, that means price is going to be going down. But since price is still pushing, the only thing I can do now is to set my sell stop order below these candles here, so that the only time I get triggered into this trade is when price start doing what I want, when price start breaking below the level, or when the trend has changed from being bullish to bearish. Remember, we are not trading against the trend. We are not trading against the trend. We are just setting our trades, and can only get trigger in when the trend has changed from being bullish to bearish. And if we are not going to always be on the Pound JPY charts, this is how we need to be doing it. So let me set that trade so that you understand better. So I'm setting my trade below these weak areas, so that I can only get trigger in when price start moving down. If price is not move down, I can safely delete my sell order. So let me do that. 190. Let me give price a little bit breathing space. So let's say 191 400. So let me be selling this 191 400. So let's see. Let's use a sell order. You can see the stop loss I'm using. I'm using a mini lot size, so I don't want to be risking that much. $91 400. So as you can see, the only time we get trigger into this trade, let me show you this. The only time we get trigger in is when price start breaking this level, start moving down. That's the only time we get trigger into this trade. Right now we are not in the trade. As you can see, we are not in the trade. It's a sell stop order, and that's the beauty of it. If price continue up, we can just safely delete the order and move on. We have nothing to lose. But if price start pushing down, that's the only time we get trigger in. So you should try incorporating the sell stop and the buy stop order into your trades. Just try it out. Try 50 or 100 trades using the buy stop or the sell stop order, and see if it is something that works for you and you want to start using it. Because that's most of my, let's say 70% of my entries I use a sell stop order. Only 30% is an instant execution, because it helps me to wait for my trade. Like right now I've set my trade, I can just focus on another pair and I'll just walk away from the charts. I don't have any attachment to it. If price does what I want it to do, if my plans play out, then I'm laughing all the way to the bank and price will continue in my direction even though I'm not in the chart. But this is just the first part. I haven't set my stop loss yet. So all I want to do is to set my stop loss to around above this candle. I'll have like uh, a 3.5 pip stop loss. My stop loss mustn't be above these candles. It can only be slightly above some of these candles here, because I don't see a reason. If price is going to break this level and continue down, there's no reason to come back to these highs. So let me set our stop loss. So this is our entry, here is our stop loss. So the only time we get trigger in if price start pushing down and trigger us in and the trend change and continue down back to some of these lows. So that's, we'll leave this, this is how we set our trades. So let's go back to US oil. Let's go back to US oil. US oil. So price is still, I don't think there's enough volume in the market. You can see multiple week rejection around this area. There's not enough volume in the market. So just keep waiting and see. And currently on gold volume is still low for now. But if you are currently in the sell, as I said, should have gone break even or trail your stop loss into profit. That's if you are sold the market when it was around this area, you have gotten a 1-to-1, go break even or trail your stop loss into profit, so that I can remove the risk from the trade. So I think that's the two analysis. And one thing I want to talk about is don't trade everything. Part of your trading plan is should be find 2 or 3 pairs you trade and just focus on those two. Don't go around pairs, don't go around the charts looking for a trade. That's not being professional and you won't be here for long term. Look for two pairs. Let me just recommend two. Look for 2 pairs that you trade. And when you come to your chart in the morning or whenever you trade and you check those 2 pairs and there's no trade, you should walk away and check later or the next day. Because when you become eager to trade, even when you come to your chart and there's no trade, you go around looking for trade. Even when the trade is not there, you just take any trade just because you need to trade. That's not a winner's mindset. If you have been with me, if you have been a loyal viewer for a while now, you will understand that I only trade 2 or 3 pairs. I trade the Pound JPY, I trade gold and oil. These are the three pairs I trade. You can hardly see me trading any other pair. Mostly what I focus most on is Pound JPY with gold. It's just recently that I start trading the US oil. So I love trading gold because of the volatility, the spread. Gold moves every day. It moves up and down. You see multiple spike. People fear trading gold because of that. It's not that stable. It moves up and down rapidly. But that's where your money is. When people are afraid, just know that that's where you are going to make your money. Once you understand the basic fundamentals of how the market moves, you won't be afraid. Your confidence level goes up and you make better decisions. So that's all we are doing, part of your trading plan. And if you are having problem having a trading plan, as I said, check out my page or check the video description. There's my personal WhatsApp link is there. You can chat with me directly, and through the WhatsApp I'll respond quickly if you use the WhatsApp link. But we have many social media links. We have the Discord, the Telegram, and the rest. But if you want a quicker response, use the WhatsApp link after the live stream and I'll respond to your question. And if you are trying to make a good trading plan, and one of the things is, it's not about having a trading plan, it's about sticking to it. Most of you traders have a trading plan, a good, very good trading plan, but the difficulty comes in sticking to that plan. Difficulty comes in not sticking to your trading plan. You just have it written down, but when the time comes to execute that plan, you don't. You get emotional and start doing dumb shit on your charts. You end up blowing up your account. Trading plan is like a system you use to keep your emotion and protect your capital. Part of my trading plan, I don't take more than 2 trades a day. I don't take more than 2 trades a day. I can go, sometimes I trade up to 3 or 4. Sometimes we're all humans. Sometimes I break my trading plan and go above that. But we are all human. But the only thing is try to stick to it. That only happens few times a month, maybe 3 to 4 times a month. But always stick to my plan. If I come to the charts, I know that I'll be trading only 2 trades a day. So I only wait for high probability trades. I prioritize quality over quantity. And if you're not prioritizing quality over quantity, then you'll be gambling when you come to your chart, because you feel, if you feel the next trade will be a winner, so you keep on trading. Before you know, you have blown up your personal account or breach out your evaluation limit for the day. But if you prioritize 2 trades per day, you know how much you'll be risking. Before I take a trade, I know how much I'll be losing on that trade if it goes against me. So I first accept the loss mentally. I first accept that I might lose that trade. I mentally prepare myself, because no strategy out there is foolproof. You are going to lose a lot of money, but the only thing we are doing here, if you have a trading plan, is to mitigate that losses, to reduce that loss, and to protect your capital. If you don't have a good risk, if you don't have a good risk management, I don't think you are ready to trade. Just focus on your demo account, because risk management is key for you making money in Forex. I need to start thinking in terms of probability, because you are not going to win all of your trades. In probability, meaning if I take if I take if I take 3 to 4 trades a day, how many am I going to win? How many am I going to lose? And what is the risk management? What is the risk to reward? Okay, let's say I take 2 trades. As I said, I always take, part of my trading plan is 2 trades per day. Don't go above it. If I take 2 trades per day, if I take the first trade was a loser, I always risk only 1% per trade on each account. Highest I can go is 1.5% on each trade. I can only risk 1.5% of each trade on each trade. Sorry. So imagine the first trade is a loser. I lose 1.5% on that trade. Then I wait. I keep my emotion in check. I wait for the New Year session. I took another trade, my second trade, and I hit a 1 to 3, or a 1. Let's just say a 1 to 2. You see, I've made back my loss for that day, and I'm still up 1.5% for that day. So that's the way of thinking in terms of probability. If you have a good risk to reward, there's no how you are not going to make money in Forex. And that's what I keep stressing out. And especially if you are taking a prop firm challenge, you need you need a very good risk management. You need a very good risk management. And don't read the news. These are some of the tips I'm giving you. I have a video that I did, I think that I did about prop firm challenge, and the result I showed you guys on the video. If you haven't seen the video, check out the video on my link. Show you the tips on how to pass your prop firm challenges. So okay, let me talk about prop firm challenges for you guys. Prop firm challenges are good, but for beginner, if you're just starting out in Forex, I won't advise you to buy on prop firm challenge. Even though you have the capital to buy, don't do that. You are going to lose your money. First, have a try a demo account, or fund a personal account, maybe $100-$200, and trade it, so that you get a personal feel of the market. If you're a beginner, if you're not, if you're a beginner, until you master the basic fundamentals on how the market moves, you you should not buy a profit challenge. Shouldn't buy a profit challenge. Forget about what the gurus tell you online. You can be a successful trader in a week or two. That's a great news, but you can't gain you can't you can't gain all the experience in 1 or 2 weeks. Yes, you might be lucky here and there, and you can make a few bucks, but that God doesn't guarantee your long-term success. You need the experience. You need to experience it personally. You need, our brain is a good machine that identify patterns and trends. So you need to take many trades, hundred of trades. You are training your brain to identify multiple patterns, because most of the forex pattern, they repeat themselves every time. Like this break and retest, they happen. I've taken so many trades on this sales is so the patterns always repeat themselves. So it's not like we are doing magic here. There's a science behind it. You need the experience. You need to understand how the market moves. These patterns repeat themselves every day on the chart. So example, this week here, this whenever a candle creates a top wick like this, there is no doubt price is going to go down. Whenever, just look at what I'm saying now so that you can see when the candle come. Whenever a candle create a top wick like this, there's no doubt price is going down. So how did I know this? Because I've seen it so many times. I see it happen on the charts hundreds of times. So that's why I say you need the experience. You need the experience to really be here for the long time. And if you are serious about your financial success, and you really want to learn, then I think you are in the right place, because I try to be honest as possible with you guys. Try to be honest as possible. I've lost so many accounts. I've blown so many accounts. I've lost a lot. But that losses was my blessing, because I get to share with you guys my experience in the forex. Without those losses, I won't have the experience and knowledge to teach you guys. I've blown up a lot of accounts, and this hard earned money. I was working with someone. I was a 9 to 5. They pay me. I just fund the account. Maybe I just take a little out to do 1 or 2 things and fund my personal account, and I end up blowing that account in a matter of an hour. So it's kind of funny right now. It's kind of funny and a sacrifice. Imagine working for 30 days, getting paid, maybe just removing 15 or 10% of your salary, funding it with a broker, and just trading it maybe for an hour and blowing up everything. You can imagine the feeling. But I did that several times. Sometimes I use other people's money. I was in debt for a while because I had to borrow money to fund the account. So these are some of the mistakes I do. And looking back on it now, it was a blessing because I learned a lot. But I would not like to take that route. There are many ways to learn, but I don't think that part is how you want to learn. It's very painful. So that's why I'm sharing these tips with you. One of my mistakes is I always revenge trade. If I take a trade, it goes against me. I like to take back that I like to make back that trade that day, that time. So I revenge trade a lot. Most of the time it was my fault. I couldn't walk away from a losing trade. If I'm losing, I keep adding position, I keep adding up position. Before I know, I'm risking more than enough, and I blow up my account. So it was a vicious cycle for me. But when I blow up many accounts, personal account, I had a I had a moment of clarity. I identified where I was making the mistake. I analyzed my losses, and I knew only one or two losses was what triggered what triggered me to blow up my account. Because when I take a loss, I can't walk away from the chart. I keep on trying to make that loss that moment, and I keep making mistake. Because if the trend is going down, if the trend is okay, let's say the trend is going up, I let me show you an example. Maybe if the trend is moving up and I sold, the trend is moving up and I was buying, and I, little did I know that maybe the trend has changed. Maybe the trend is now changed to sales. Let me show you. Okay, let's say I was buying the market before. Let's say the first trade I took was a buy at this level. Price was pushing up. I took the buy and I got stopped out because the trend was changing to sales. Price was now moving down. So it was moving to I was supposed to sell at this level, but I bought, so I lose the trade. So I was still thinking, okay, price is still going to go up. I still take a buy. I lose that. I still take a buy. I lose that. I still take a buy. Because I'm emotional. At this point, I don't know that the trend has changed from being bullish to bearish. All was in my head was to make back my loss. And that's the vicious cycle most of us find ourselves in. When we take a trade, we take a buy, we lose it. We will not take a second to analyze. We'll still take the same buy immediately. We'll lose it. We will not be patient to wait and still analyze the market. We'll still take the same buy. And before you know, that's how we blow up our account. So I've shared a lot with you guys, and it has been a wonderful session. If you're a new viewer, you should like the video, like the stream, subscribe to the channel so that you get notified whenever we're having this live session. Thank you for the likes. I can see we have many likes. Thanks a lot. That shows you are gaining value, and it encourages me to do this more, to share my knowledge with you guys. So thanks you a lot. We trade 1 hour the pre-London and 1 hour the New York session. So if you have not been with us, we are going to be trading for 1 hour later in the day, the New York session. So yeah, I think that's it for now. We just hope this pound JPY trade we have set. If we come back during the New York session, there's enough volume, that would be great. It's a good time to make money. So thank you for joining the live stream. Thank you for the likes. We'll see you later during the New York session.